Hey everybody, it's Pete. Good morning. Thank you so much for joining me today. It is Friday morning. We made it through the week, April 30th, the end of April. We made it through the month, which is actually a pretty good month of trading, much better than what March was. I still had to be picky, still had to be sniper-like, but stock trading this month was fun again. I don't know if I could say it any other way. Day trading has been a little bit easier. You've had to make some adjustments on day trading. Where some of the normal classic scenarios that you'd normally be trading that would just kind of like fly off your fingertips and produce some good, easier trades, those trades were starting to fail. So we had to make an adjustment. We had to lay back a little bit. We've been talking a lot in the boot camp about being patient on the open, not getting involved. It's kind of funny. Even going back to the days when I owned my trading firm, it was kind of like when the bell rang, it was like a horse race. Everybody's like, I have to do something right now. And really, you don't. You have to do something when great trades line up, when there's volume, when there's relative volume to what the stock normally does that's a little bit higher, right? So anyway, we're going to get into Apple today. We're going to look at overstock and the earnings. There's actually a lot of earnings that we're going to discuss today. How to trade those earnings going forward. And some of them are short sales, actually. And we're also going to be looking at Peloton today that hit some key levels yesterday, that it's a bull market and the market rolling over. And I'm going to talk about a really big question that I got, which was, it seems like you always trade breakouts. And I'm going to answer that as well. So stick around. We'll be back in 1 second. Okay, so the big thing we're going to talk about is we're going to go over the Apple play from this week, why Apple had blowout earnings, upgrades, everything about the stock should have exploded higher, and it didn't. We actually before the earnings we had announced, we did a really detailed analysis that 138 was the big level. We need to see it get above 138. We said 3,400 in Amazon. Apple 138. We've been trading the stock very actively since the stock split. 138, 138, 138. We're pounding the table on 138. Got up to, I think, 144 right after the number. But then, as we've been talking about the last week or so, letting the market digest the actual numbers. And the biggest word that you want to have in the back of your mind when you're looking at these is guidance. Again, I'm going to say it every day because it's super important. What happened previous is what you paid for 3 to 6 months ago. What you're buying today is what's going to happen in the future. And Apple's guidance was not good, and the chip shortage has a lot to do with that. So there's two things you're going to pay attention to right now with Apple stock. You're probably going to see it sell off a little bit. We're going to take a look at an article from Investors Business Daily analyzing this in a pretty decent detail, where the chip shortage is the factor. Right? That's the guidance factor. So, but there is a new chip shortage plan put into place to solve that problem. So what I am forecasting, for lack of a better way of putting it, we're probably going to see a little bit of short-term weakness in Apple on the chip shortage news. And then as soon as the news reverses, we're going to end up exploding to the upside, blowing through that 138 level and making a run once it gets fixed, for lack of a better, I don't know why I'm snapping. All right. So anyway, we're going to get over to the charts. We're going to take a look. We're going to start out with the futures. You can see, actually, this is, I'm going to come back really quickly. 1 second. The question I got asked from Chris in our swing trade tracker community yesterday. By the way, we're having a really good month on the swing trade, and you definitely want to click the link below the video, and you'll get all of our updates, everything sent right to your phone on the Slack app. Super easy to use, super easy. Get notifications. I don't text, I don't email any of that stuff every day. I just send them right to your phone. You can decide what you want to do. And you also get my Foundations in Swing Trading course for a lifetime. All you have to do is sign up for the first 30-day subscription. If you love it, stick around. If you don't, we'll part as friends. You get to keep the course. The question was, it seems like you're only trading breakouts. Is that the only thing you trade? And let's look at it from a little bit of a bigger picture. The market's making new all-time highs every day. What else am I going to be trading? Why would I be waiting for stocks or looking at stocks that are going down while the market's making new all-time highs? It just doesn't make any sense. If that's where the smart money is, why would I be doing anything else? I'm trading stocks that are going higher and looking for them to continue going higher, which is a really big thing. Don't fight the tape. The tape is saying we're going higher, we're going higher, we're going higher. look for spots to buy. We do have a couple of stocks that have pulled back recently, and the market's pulling back today. So we're looking to find some support. So we're going to actually analyze the hourly chart on a couple of those. We do have one breakout that we're going to look at today in a very popular stock that cleared levels on good volume, and we're going to take a look at that in a minute. But let's go back over to the futures. And you can see, again, yesterday we punched through new all-time highs. We're trading down a little bit lower today. Taking a look at the SPY. Again, the SPY fought its way back. If you happen to not be day trading the SPY or day trading stocks right now, what a day yesterday. And again, if you're a part of our online community here in YouTube, you know that we like to work the charts. And the SPY actually broke the downtrend, and we were looking for it to bottom out here. We're finding a lot of buying opportunities right in that 10 o'clock to 10:30 window. This was just after that, but the trend did not stay there. To draw proper trend lines, understand how to properly draw the chart, you need to know what significant levels need to be broken. So that is actually the price action I'm looking at right there. It pushed down, broke, had to get above that level. It didn't, broke down again. So now we have another level, which is this one. And right here at roughly 12:35 is the moment when it was time to start to get back in there and get long. So this is really what I meant as a trader. If you happen to be struggling right now as an active trader, you don't need to change your strategy. You need to adapt how you're using your strategy, because trading with the smart money, trading with the deep pockets, there's really no other way to say it. It's the easiest way to trade. Why buy a stock that's going straight down when you could just say, oh, that stock is already going up. Somebody with much deeper pockets than me is buying it. Let me find a spot that's low risk and see how much profit potential is there. That's the way we do things. That's order flow. That's trading with the smart money. And then the last part of that is what happens between entry and exit, which is really the golden keys to the kingdom, which is understanding, getting in at the optimal entry and knowing what a realistic profit target is for the risk that you have to take. So if you're struggling right now, don't change a strategy that's been working. Adjust how you're using it. Maybe be a little bit more patient. Maybe be a little bit more devoted to working orders, and that'll be the easier way for you to get out of that slump. And Chris Mulia, I'm talking to you. All right. So what we're going to do is we're going to dive back into looking at some ideas. We're actually going to go over to Apple, because as we talked about Apple, here's the big thing. Everything was getting upgraded. The numbers would blow out, but this is what was the story. Oh, you can't see my screen. Let's go back over here. I don't know why it's not coming up. Let me see. Let me go here. Oh, it's getting stuck. All right, so you can't see my screen right now. I'm not sure what's going on there. Oh, that stinks. It's not going to help if you can't see my screen. Hang on, let me stop that and start it again. Okay, there you go. We're back. So this is really what we're talking about with Apple. Cautious guidance, that's the big thing. And if you scroll down a little bit, everything was good for Apple as far as the numbers are concerned. Flurry of price targets, earnings beat, everything looked great. This is what the problem is right now, is the chip shortage. So again, what I'm going to be talking about now is I'm expecting this news to linger just a little bit, bring Apple down to a little bit of a better buy point, which I'm looking for it to be right around the 125, 128 level. It's going to look like it's going to be falling off a cliff. The news is going to change, and then we're going to take off back in the other direction. That's my forecast. And what's interesting, look at how much we've worked Apple over the last 6 months. It's been actually not as tradable as you would have think that the stock has been. However, now we're going to jump into Amazon. Amazon 3,400 is the level. It was up close to $200 yesterday, pulled all the way back, still needs to stay over that 3,400 number. I'm not going to change my tune on that. So if you're looking to initiate a new trade, that's the window. You need to risk some money in Amazon to be able to trade it. Twitter got obliterated yesterday. It's already down 12% this morning. You can see the line in the sand. We were looking for a 63. It blew through that to the downside. So what is the trade in Twitter? For as strong as the stock was, this is where it took off last time. So really, I'm not looking to do anything in Twitter until it gets down, if it gets down to the 55 and a half level. NEO's another one that had earnings coming out today. excuse me, yesterday. The conference call was late last night. Stock is actually down 51 cents. So now what is the play? You can see the chart that we drew here. It had a downtrend line from the middle of February. We broke the downtrend line. It looked like over 40 was going to be the big breakout. We actually got a tease of that, but then earnings are coming out. So we lightened up on the position, and now it's actually opening a little bit lower. So the next trade in NEO, again, moving in our direction, not fighting the order flow, waiting for the smart money to push in that direction. I'm waiting for it to get back over 43. Until then, I'm just going to be day trading the stock, and I'm not going to be looking to initiate a longer term position. Right now, it's stuck. It's in that box. That's the right price until something changes. Now, the stock that I was teasing before that we're going to talk about is Groupon. Groupon actually broke out of, again, this is kind of similar to what we're looking for in Snap right now and what we just talked about in NEO. Don't fight it. If it's here, leave it alone until the price changes, until somebody with deep pockets, smart money, says this is now a better price, and I think it's going to go further from here, which is why they're going to pay higher prices. So as long as the stock stays above 51, I'm going to be looking to build a position and looking for that to make a run back up to that 62.50 level that it hit about a month or two ago. EA, again, getting back to the breakouts, EA, nothing to do here, but I do like the fact that the stock is slowly grinding higher up into this 148 level. So set an alert in EA at 148. SKLZ, the Cathy Wood trade, has been discussed quite a bit over the last, let's just say, 3 weeks. And now what's kind of interesting is we're actually forming a really solid bottom in the stock where you push up, come down. I call it a failed test of the low where it doesn't make a new low. And then if it rallies, so the alert that we have right now for SKLZ is 22. Maxim, MXIM, another trade where you have to set your alerts. This is what great traders do versus somebody who's always scrambling for ideas. You create your game plan, you script what you plan to do, you set an alert here for Maxim at 98, gets up there, then you look for low risk entry into the next move. We're going to look at CRWD. And we're actually going to do, you can see again how much we're working here. We're going to look at it on the 60-minute charts, and we're going to zoom out a little bit. You can see this trend here over the last 8 to 10 days. Awesome. Finally broke down, giving us a little bit of a better price. So I'm actually looking for a little bit of a lower opening in this stock to find support at 208. If two buyers come back in right at the last level, which was yesterday's low or pretty much close to yesterday's level, you can see it's actually opening lower, which is fine. That 208 level is the area we're going to be bidding. You can see VRM actually very similar to that. We had to work the chart here. Let me go back a little bit further. You can see going all the way back to almost a month ago, actually, a little bit longer than a month ago. The uptrend is still valid. It spiked to the upside, which accelerated, meaning we need to draw new trend lines, working the charts. Now it's in this box, this 47 level, which is like right where it's going to open up today, or at least that's where it's scheduled to open. If it breaks below that level, leaving it alone. But I am actually looking for a snapback trade today. So in other words, I'm looking for it to open lower, reverse, and then get back above 47. And that's where I'm going to look to initiate a new long there today. The short sale idea that I was talking about before is Peloton. Peloton didn't really have great news. They're obviously not going to be affected positively based on let's get out of the house, like all that kind of stuff. This is a monster level. This $96 to $99 level in Peloton is really big. We start to trade below 96. The next level is 80. So there's a lot of room to the downside. This is a potential short sale, maybe even buy some puts looking for a move lower. Something else I want to talk about today is two sectors that have been pretty strong over the last week to 2 weeks. And again, this is a big part of trading, is understanding how to script tomorrow, script next week. You need to have a list of stocks. They might not be long-term trades today. And again, when I say long-term, I mean swing trade long-term, but you need to have them because when they rally and pause, we keep going, push and a pause, a push and a pause. If they're in a really solid push and the pause starts to happen, you need to have them in your list so that the next move you're prepared for. And right now I'm talking specifically about energy stocks that have woken up and financial stocks that have woken up. So we're going to actually take a look at a couple of those right now and show you which ones I'm talking about. So on the energy stock side, we're talking about CPE. And again, you can see it punched up to that level. So above 40. So again, pushed up, had a nice 3 or 4 day run. We've been talking about it. And now it's going to pause. Has had great earnings. We're looking for heads to pause over 75. Sticking with this sector, same thing. FANG pushed up, paused, and now we're looking for that to maybe take a rest for a day or two and then get back above 88. and EOG is same exact thing. So you're starting to see a pattern here. Push up, looking for the pause, looking for the next move. On the financial stock side, Goldman Sachs meets this criteria. JP Morgan meets this criteria. COF meets this criteria. Again, you're starting to see stocks that need to be in your watch list. Discover Financial and Visa. Okay, so these are trades that are setting up, looking for them to pause today, maybe even Monday, give us a better reward potential, give us awesome risk profile, and then look for the next move. And this is a really big part of trading. You need to know what you're going to trade beforehand. If you're just spending the day chasing alerts, that's a really tough way to make a living. And this is where the gold is. I call this my treasure hunt that I go on every night at 7 o'clock and I review it the next morning. This is really where the money's made. And when the market opens, it becomes a lot easier because you're just sitting back and executing your plan for the day. If you're day trading stocks or if you're swing trading stocks, you're just sitting back and saying, all right, I know my levels and that's all I'm going to do. And it's a lot less stressful, I can tell you that. So thank you so much for joining me here today. We covered a lot. Pay attention to that Apple. Let's see how that unfolds over the next week or so. If you find these videos helpful, definitely click down and subscribe. I'd really appreciate it. If you have any questions about anything we talk about in the video, absolutely leave a comment below. I'd love to hear from you. And give us a thumbs up. That lets me know that you enjoy this kind of content. And I'd really appreciate it because that'll help me produce more stuff that I know that you want to hear. It seems like sector rotation, that kind of stuff is a really big topic. I'm getting some nice comments about that. So we're going to dive deeper into that stuff next week as well. So have a great day, everybody. Have a profitable day. Have a safe weekend, recharge, and I will speak to you again over the weekend. Take care now.